All right, welcome to Ichimoku Cloud for the New Trader. My name is Jason Paff from thedutchbook.com. Feel free to fill up the chat box. Would love your insight, questions, comments, and feedback. If you've got some things you want to make sure we cover today, please start filling up the box. It's always my goal on a webinar to answer every question, take your feedback, take your insights, and help with anything I can. So please take the opportunity to put your questions there in the chat box. In addition, you can email me always any questions from this webinar or anything in general regarding Nadex or other resources or just questions in general. My email address is Jason, Jason, at thedutchbook.com. I'll have that on a slide later, but just wanted you to know that even after the broadcast is over, anytime you need anything regarding this topic or any topic regarding trading on Nadex or where I think there may be some additional resources, please take the opportunity to reach out. I would love to help you and give you my insight. All right, before we get started, just a quick look at our risk disclaimer. Just a few important things to keep in mind. Certainly any trading, including trading on Nadex, involves some level of risk, may not be appropriate for everyone. Our purpose today here is purely educational. There's absolutely not going to be any level of solicitation to buy, sell, or anything of that nature. As it gets to any trading decisions, certainly that would be your responsibility. And as we look at some charts of historical data, please keep in mind those are historical levels and cannot be taken or should not be taken as any indication of future results or the likelihood of future results. All right, with that said, let's get started. As I said, my name is Jason. I've been an educator with Nadex for providing educational material on Nadex for a little over a year. I absolutely love and look forward to these webinars. Again, it's certainly my mission and intent to help and give you any level of education, information, support you need. In addition, your questions and insight is always helpful to me. I always take away and learn more than I'm ever able to give. So again, just one more encouragement there to, as I said earlier, fill up the chat box. Let me know your questions, things you hope I cover. Typically, and I publish articles on market news and host other webinars in partnership with Nadex. Really take a three-part approach. So if you've seen other webinars we've talked about, other topics we've talked about, other trading systems or technical indicators or some high-level fundamental information on oil markets, for instance, or crypto, I would typically look at fundamentals in addition to technical indicators as it gets actually to trading, sizing trades, looking at risk reward, in addition to some quantitative and data-oriented topics and methods as well. Our purpose today is purely or primarily technical in nature as we talk about the Ichimoku cloud. So Ichimoku, taking a step back, and some of you may be somewhat familiar, some of you may not be familiar at all, and some of you may be experienced with Ichimoku and just looking for a refresher. It's a trading system that goes back many decades. It was invented in Japan, hence the name Ichimoku, a traditional Japanese term. It roughly translates to, at a glance, the intent being to develop a chart system that provided any information a trader would need in one glance, obviously in a relatively short amount of time. If you think about a one glance, there'll always be additional information you can look at as a trader. Ichimoku is not intended to be all encompassing or anything you would ever need to look at, but as you glance at a chart, the intent is to take in all the information that you can in one glance to make the most of that opportunity, to give you context, to give you a projection into the future, and to give you a sense of what's going on in that market. At its core, it's really built on moving averages, and I did a couple of webinars with Nadex last month on technical indicators. We talked about moving averages, and we also talked about some other technical indicators, RSI, for instance, or MACD. Those webinars, incidentally, are archived on the Nadex YouTube channel. Encourage everyone, if you haven't, go out to the Nadex YouTube channel, check out the other resources, a fantastic library of resources and content for traders of all types. So moving averages are really the foundation for Ichimoku, and we'll look at how that's built and constructed in a second. One of the reasons I love Ichimoku for Nadex is because with Nadex, you have so many opportunities to trade so many different markets and so many different time horizons. If you haven't already, I encourage you to go out to nadex.com/demo, register for your free and permanent demo account. It takes a couple of minutes, and that's an account that's permanent, and we'll stack some virtual money, so to speak, in a demo sense, that you can make live trades with in live markets and really get to know and get used to the Nadex platform. But as you go through that and as you get to know Nadex and you see the range of markets, which is ultimately a cool thing and a benefit. But one of the things I like to encourage new traders, either to Nadex or new traders in general, to be able to do is set up a system to be able to evaluate markets in a very consistent time or in a consistent way. So you're doing the same thing every time. You'll iterate over time, but day to day, you want to be doing something similar to evaluate markets and market opportunities and potential trading opportunities. And two, you want to be respectful and mindful of your time. As a trader, and you guys know this better or as well as I do, your time is your most valuable thing that you have. The information and the resources you take in ultimately inform the trades you'll make, and you only have certain windows that certain trades will work. If you're trading on Nadex, obviously you've got expiration. If you're trading other options products, expirations come into play. Time is a major, massive factor in markets. So one of the reasons I love Ichimoku is it works well in a compressed time frame. It's consistent market to market, and it also gives you a tool, one tool in many that I hope you develop in your toolbox to evaluate those markets or those trading opportunities. So you may be interested in trading metals and commodities and Forex and stock indices and looking for opportunities to do that on the Nadex platform. To look at those with different indicators that you feel may be better or suited to those different markets would be challenging to do because it would be inconsistent market to market. Ichimoku provides a uniform way to be able to do that, again, at one glance in a time compressed fashion. So a couple of the benefits here of the cloud or Ichimoku. One is it provides you a look at the trends. So one part of it is as a trending indicator. So it shows you where a market's been. It shows you where a market is now in relation to where it's been. That's ultimately what makes it a trend. If it's been down 10 sessions in a row, that's obviously a downward trend. And Ichimoku is not only color coded, but has different lines that will help indicate that trend. So you know where the momentum is, where the market's moving, and again, in one glance, you can get a very good sense of that trend. That's something that is inherent in most moving average based indicators, no question, and it's certainly a core central part to Ichimoku. Two is timing. One of the most important parts is as you trade, whether a spread or a binary option with Nadex, is to understand before you enter into the trade, and certainly you need to manage it as the trade progresses, if you do enter into a trade, is your entry and your exit. And Ichimoku gives you a sense of support and resistance for that market, which a trader could think of as a potential entry and exit point for your trade. And that really ties to the third point on the visual, in that Ichimoku is unique as an indicator in that it gives you a future projection of where those support and resistance points may be and where the trend may head. Now, as with every system, and I find myself saying this on every webinar and every broadcast, there's no perfect system. And Ichimoku has flaws. Every system has flaws. Every trader has flaws. Every piece of data has potential weak points and flaws. But Ichimoku does have, again, a consistent way of calculating potential future and our support and resistance, and they're based on the trend, so that those support and resistance points in the future will be dynamic relative to the current trend. So that's important, because if you trade purely based on, you know, what I would call price action, and you're looking at swing highs and swing lows, those are fixed points in time based on a previous value that market has achieved. And those values are important. I look at swing highs and swing lows and price action as well. But with Ichimoku, it will give you a dynamically moving in the future projection based not only on where the market and the underlying price is today, but based on the overall trend and the general momentum, either up or down, or maybe it is flat, of the market. Ultimately, the visual, and we'll look at this on several slides, forms what people refer to as a cloud. It looks like a cloud, hence the name cloud, if you're wondering the origin of that term. And that cloud becomes your visual representation of current and future support and resistance. And it will literally, you know, stream through your chart as a cloud in the sky, and you'll be able to very quickly see that as a potential support and resistance point as you're calculating and evaluating different trading opportunities. So that's another big benefit for Ichimoku as we get to the, you know, if you're asking yourself, why would I trade, or what's the value of trading Ichimoku? One of those is that future projection. Even if you don't exactly specifically trade on that level, it is giving you a visual cue as to where that level could be in a very quick look as you're trading. All right, so real quick, let's talk about what makes up Ichimoku, and then we'll look at some examples. You see there, and I tried to isolate these to make it a little simpler to look at. If you've played with Ichimoku in the past, or if you've taken a look at some different Ichimoku indicators, one of the first knee-jerk responses of new traders is, there's a lot going on there, and I don't know if I'll ever be able to understand all that. Ichimoku really is a series of lines, and then there's going to be a color between two lines, again, the cloud. So there's really, you know, a series of 5 lines that we'll look at. And I just wanted to, on the next few slides, we'll isolate those individually, atomically, and then we'll build up and look at a full-blown chart. So hopefully through isolating it here through the next few slides, I find that's easier for folks to just to understand the concept. Don't worry about memorizing formulas, just kind of understand what's behind each line, and then we'll look at a roll-up and how to use it in a trade. So the blue line, it's typically colored blue, is this called this, you know, the slang term is the standard or the baseline. If you're wanting to use the traditional Japanese, which I don't necessarily encourage because it would make it more confusing, Kiju-sen, but this is the blue line. And I just, you know, I'm a simple guy from Oklahoma. To me, it's the blue line. So this is just simply an average of the highest high and the lowest low over the last 26 periods. It's that simple. As I said earlier, Ichimoku is basically built on moving averages. The blue line, which is your baseline, it's an average of the highest high and the lowest low over the last 26 periods. That's your, you know, it's similar to, you know, how you know, a MACD line is maybe calculated. So conceptually, it's pretty straightforward. So as you see the blue line traveling through your Ichimoku chart, it's just a moving average, the highest high and the lowest low over the last 26 periods. Incidentally, just as a footnote here, if you know, in your trade station, you know, I've used all different kinds. These visuals were out of a trading view. you can even set, I don't recommend this, but just if somebody asks, or if you have the question now, you should, in any charting platform, most charting platforms have the flexibility to even to change, you know, if you find you want the standard line to be a little faster, you cut the 26 to 18 periods or 15 periods. I would do that after you have some experience with the 26, but even that should be flexible. So that's your blue line, highest high, lowest low, 26 periods. That's just your standard, basic moving average trend line. So your red line is the turning line. You know, this is, to me, it's the red line, but it's the faster of the moving averages. So this is the highest high and the lowest low for the last 9 periods. So similar to how you have MACD lines that are calculated at different time frames to show, you know, one turns faster. It'll show you, you know, a juxtaposition of the recent trend against the longer term trend. That's really what the red line does in Ichimoku. So when that turns, it shows a new direction in the trend, and it's going to turn faster or detect the trend faster than the blue line. The blue line is the slower of the moving average lines in Ichimoku. The red line is the faster of the moving average lines. So now the green line, and this is probably the one that is the most confusing to people. Sorry about the delay here on the visuals, guys. So this is the green line. This is honestly unlike any other a line that you'll see in another indicator. So the first two, the blue line and the red line, I think make sense as moving averages. The blue is the slower moving average, the red is the faster moving average. The green line is a lagged price trend. So you just plot the trend starting with today back 26 periods. So, and we'll look at a larger blow up of some Ichimoku charts here in a second. You'll notice it mimics the price trend. It's just plotted in reverse. So we'll look at kind of how that looks in the context of that. But if you don't have a lot of experience with Ichimoku and you're kind of trying to learn it on your own and piece it together, folks, after a while, get that, hey, it looks like the current trend, but it's behind the action on the chart. Well, that's exactly what it is. It's the current price trend. It's just lagged over the last 26 periods. That's the green line. All right, so the next two, these are we'll start to build the cloud here. So those first couple are your moving average lines that give you an indication kind of the current trend. Again, if the red is turning and crossing over the blue, let's say it's crossing up, that could indicate an uptrend. If the red's crossing down below the blue, could indicate a downtrend. The green gives you the context on where the trend has been, the lagged trend line. So the lead lines make up what's known as the Senku span, or again, the cloud structure. So the green line of the two cloud lines is the average of the red and blue lines, and it's plotted 26 periods ahead. So let's just keep this really simple. The green line of the cloud is simply an average of the red and blue. So remember, the blue is the slower of the two, the red's the faster. Those are just two moving averages. So this is literally a moving average of a moving average. And it's plotted into the future 26 periods. This is where we start to get that projection. The second line, which is typically orange, it might be reddish on your trade station. It's determined by averaging the highest high and the lowest low for the past 52 periods. And then we plot that 26 periods ahead. So that second line is really the one in Ichimoku that goes back the furthest. It'll go back a full twice as far, or 52 periods, as the other lines go back 26. Okay, and that's the red or the orange line that makes up the cloud. So the green line, it's simply a moving average of your other two moving averages. You take your 26 period high to low, you take your 9 period high to low from your red and your blue, and that's your green line. Your orange, you take the highest high and the lowest low of the past 52, and you plot that 26 periods ahead. And again, that's a moving average as well. With each passing period or passing day, if you're trading on a daily, that line changes as you move up on your time horizon. All right, so trading the cloud. Sorry about the delay here. So real quick, this is the cloud. It's in traditional Japanese called Kumo. It's a space between. So the edges typically will identify current and potential future support and resistance points, as we said. So if we're above the cloud, and let's say the cloud as it is in this visual here on the right, the cloud is green, we're above the cloud, you can generally think of as the cloud as support. If let's say it's red and trending down, the cloud is pointing down and it's red, and you're under the candles are under the cloud, then the cloud should be thought of as resistance or above you. And again, that area in between is a consolidation zone. You should, typically, historically expect some sideways chop. That's really where the market is deciding which way it wants to go, looking for a breakout. And one of the, as you gain experience with Ichimoku, and again, I recommend for everybody, a great way to gain experience is just nadex.com/demo. You'll get a free and permanent trading account stocked with demo money to trade and learn on in live markets. It's a fabulous tool. So one of the keys really to trading and being successful potentially with Ichimoku is trading breakouts. And once a market breaks out, let's say you're in a sideways chop, sideways consolidation, and it pops high or low, and this is just my personal opinion, my personal experience, I like to see some type of move of conviction either way, and then I do like to trade based on the momentum. And again, if you've gone out to the YouTube channel, or maybe you were with us on our technical indicators webinars, the Nadex YouTube channel, there's a lot of really tried and true momentum indicators that again, personally as a trader, I like RSI, for instance. And so I like to see a breakout, and then I like to see some momentum, and then to me that is a good opportunity to potentially trade. And what I like to use Ichimoku for is, one, evaluate that opportunity, and then two, with the cloud, you can see where that future, again, support or resistance point would be, depending on which way the market's headed. And based on the moving averages and how they're laid out into the future, you get a good sense of, it's not a true measure of volatility like an average true range, but it does give you a sense of, typically based on recent periods, how much this market could move based on what the moving averages are telling you about what's possible in the future. So again, it's not as if you're actually using an average true range or another volatility indicator, which is really important when you're trading a binary or a spread, but it does give you a sense of how much the support and resistance points could move for that market. And when you get a breakout and it breaks high or low, it's really helpful to see, because as we were talking earlier, as a trader, you always want to have conviction and a strong opinion before you make a trade, but you also know your time is limited. And so Ichimoku provides a fantastic opportunity to look to see where that support or resistance might be headed, based on where the cloud is headed, in a finite amount of time that you have to execute your trade. Okay, so just a quick few bullets here on some indicators of the cloud, and then we'll look at a couple of examples. Okay, so signals historically thought of as potentially bullish. And again, as we said in our disclaimer, you know, past history is not any indication as to future results, but these are things that, you know, as a trader I've learned, and things that are commonly referred to as bullish in Ichimoku. So, you know, as we were saying earlier, breakouts are really big. I like to look at a breakout with Ichimoku, right? So when your price breaks out above the cloud, it's typically thought of as potentially, you know, a strong bullish move. And again, that's different from, you know, when price breaks out, and let's say you're not using the cloud, you can think of that as bullish, and I'm not saying not to, but again, remember, we're talking about overlaying the cloud. So it's not just a breakout, but it's a breakout above the cloud. And the cloud tells you, based on the past 26 and 52 periods, where you would need to see a breakout to before it's truly a bullish indicator. Cloud, real simple. Cloud, you know, I'm a simple guy, I like simple. Cloud turns from red to green, that's potentially a bullish indicator. The price moves above the baseline. Remember, the baseline is that high to low for the last 26 periods. Just like we would use it, any type of moving average, the price moves above the moving average from the past 26 periods, potentially a sign of a bullish or momentum breakout. And then your conversion line moves above your baseline. Remember, the conversion line is the red, or the shorter moving average of the two. So the red moves above the blue. That's your 9-period high to low moving above your 26-period high to low, potentially a bullish indicator. And again, not that much different, right, than other moving average indicators, if you're familiar with those. Okay, so here's a chart. I think we're trading. This is the dollar index. Again, if your first time to look at Ichimoku, easy to think, hey, there's a lot going on here, but remember, we really just broke it down. It's a couple of moving average lines and some colors. So I promise, if I can follow it, anybody on this webinar can follow it as well. And with some practice and hard work, I think you can gain some experience with it. And if you feel like you like it and are comfortable with it, could be a part of your trading repertoire. So if we look at the DXY chart, lower left, you see the cloud starts to act as resistance in the downtrend, right? So again, we're starting there at the left. The market's headed down. You've got the red downward cloud coming down on the left side. Clearly a bearish looking channel, bearish looking trend. I would think of the cloud in that case as resistance. The market starts to head sideways, but you can see there as we move into the cloud, those first couple of sessions, and this is a daily chart, so each candle is one day. I know on Nadex we're often looking at, you know, an hourly or a 15-minute or a tick chart. This is just a day to get a nice high level. You can see right below the text there, as the dollar index starts to move sideways, you still have, for I would say the first 3-4 weeks, cloud acting as resistance. We'll test the cloud and we move back down, test the cloud, move back down, test the cloud, move back down. So as we head over, if you follow the x-axis at the bottom, as we get into April, we start to move into the cloud. We break resistance, but we're still in somewhat of a consolidation period. And this is where I'd say, you know, we move back down below the cloud and it starts to act as resistance again. This is where, as a trader, my opinion, I would be looking for the next move of the breakout. You can see we head into the cloud, sharp move above. Now we're in the middle where the blue arrow comes across. So I've got a couple of indicators that we just talked about. The red line, or the signal line, conversion line, moves above the blue line. You can think of that as bullish. We move above the cloud. That could be thought of as bullish. And then as you see, as we head right there at the 1st of May, the cloud turns from red to green. And then as we head to June, the cloud turns up. Those are very bullish momentum-based indicators. And again, we all have personal biases and preferences as traders. I do at least pay attention to momentum. I like momentum indicators to confirm what I'm seeing. And I would say through the month of May, this is a strong momentum trade with the DXY based on what I'm seeing here in the cloud. We're above the signal line. The signal line moves above the blue line. Cloud turns from red to green. and the cloud starts moving up, honestly, rather quickly. As we head there into June, you can see the signal line acts as support. That can happen. Again, it's a moving average line. We typically look at moving averages as potential support areas. So in a strong trend, the cloud hasn't exactly caught up, but the blue line, signal line still act, or the baseline acting as support. And then as we start moving through, again, if you're following on the x-axis there through July, we're above the cloud. You can see the cloud in an uptrend. The cloud's moving up, the trend's moving up. You can see we touched the cloud 3-4 times there, where the cloud continues to act as support in an uptrend. Pretty good indication there of some of the dynamics you would be looking at as a trader, from a downtrend moving below the signal, below the conversion line, the baseline, moving below the cloud acts as resistance. Then we get a strong, sharp move up. We have a momentum based market. All the indicators turn bullish. Market heads up sharply. And then over time, the cloud starts to act as support. That's a classic case of what you'd see in Ichimoku. And then as we are, and I think I did this chart in the last few days, as we look at the cloud, again, now it's charting 26 periods in the future. In this case, we're on a daily, it's 26 days in the future. If you were trading strictly based on Ichimoku, you'd see the cloud is still offering future support levels that would be thought of as higher in an uptrending market. So that's that projection quality we talked about. However, I'd also, as a trader, look at, we're right there, that last candle, pretty good wick on it, we're right there at the baseline as well. That can be a signal that we're starting to, you see the signal line is, the red line is down, right here at the end. The red line is turning down. It's dropped below the blue line. Excuse me. And the market is now right at the baseline. So as a trader, I do have a cloud that's still continuing to head up and offer future higher levels of support, but I've also got my faster of the two lines, or my signal line, crossing under my baseline. I've got my baseline flat, and I've got the market right at the baseline. I personally would take this as a potential for, this could continue to go up based on what the Ichimoku chart is saying and projecting the future. It could also be telling me that it's moving into a consolidation zone. The trend is at least slowing. The red signal line is turned on me. That could potentially be a bearish indicator. Typically, and again, this is just kind of a simple back of the envelope way to think about it, when I've got mixed indicators, I don't even think of them as mixed indicators. That just tells me it's a market looking for direction, and that is that is the state of the market. That is where the market's at. We've been on a sharp uptrend that's paused, could break out again, but I know right here, market's telling me, we've got a market that could break either way again, and we're looking for direction as we come in from pretty steep uptrend over the last few months. And if you've traded currency, you've traded FX over the last few months, it's been quite a ride with the dollar. All right, let's keep moving. Let's look at a different scenario here. And this is where we'd look at potentially bearish indicators. So the price moves below the cloud. Makes sense. That could be bearish. Cloud turns from green to red. I like colors, keeps it simple. That could be bearish. Price moves below the baseline. Remember, the baseline is our blue line. And the conversion line, or our red line, again, our faster of the two moving averages, moves below the baseline. That could be thought of as bearish. So let's look at, we're looking at Netflix. It's an interesting release to look at. I always like looking at Netflix stock because I'm such a customer of the company. I always like to check in and see how they're doing. So, all right. So here in the middle of the chart, you see the price moves below the baseline. Remember, the baseline's our blue line. and it has broken below, and that could be thought of again as a bearish indicator. And you can see as we move through the summer, it absolutely continued to move down. So our first indicator there, our red line, our signal line, our conversion line has broken below the blue line. You can see that happens first, and then price of the underlying market moves below the blue line. As we said earlier, that could be a sign of a bearish breakout to the downside. So price starts to head down. Now you can see here the cloud lags, right? And as we said on the previous slide, no system's perfect. You could get different messages from the market or from the system. The most important thing, and if you take away anything from this webinar, I encourage you to just remember that a chart or a system can only tell you the information you've asked for, and it's really upon you as a trader to think critically about what you're seeing and about what you're gathering from the chart. As much as I say, I like the colors and the colors turning is simple, I also need to see here that I've got a downward break in price. I've got two bearish indicators where price is below the blue baseline. The red signal line is below the blue baseline. Even though the cloud still is offering a future lift in potential resistance level. Then we move into the cloud. You can see some sideways chop as we move into the cloud. Typically moving into the cloud could be thought of as a consolidation move. We break down below the cloud, and then you can see we get down to about 330. We get a nice reversal wick at 330, and we start to head back up here around the 1st of August. And that's where the blue arrow is pointing. The cloud starts to act as resistance. We've broken below the cloud. We've had some consolidation. We've made a push higher to correct higher. We get a nice long wick that literally hits, it's what, 358, 359, and the cloud acts resistance. Rejects higher price. We move lower. We move down to the low 300s, get a reversal wick, start to move back up. And you can see as on our upward trend, price now moves above the blue baseline. This red signal line now crosses over. Those are, again, typically thought of as bullish. Pushes us right into the cloud. You see we're right there at that inflection point where the cloud is turning from green to red. And again, the cloud is now acting as resistance. You can see there in the back end of the month, that was August, cloud acts as firm resistance. And you could see there as we head into September, market rejects higher price, got some long reversal wicks there at the end of August, and the stock starts to head back down. So you can see there really through the month of August, we had a couple of tests of the cloud. The cloud acted as resistance, even though it's heading up, acted as resistance, and we turned away from the cloud in this market. This is where I was saying earlier, I'd like just to for you to think about this. If you trade price action, and again I trade price action, and swing highs and swing lows and look at historical resistance, but those are fixed points. You would have probably been looking at resistance up further higher, based on where Netflix has been, right? In a faster moving market, where you can drop, in this case, 50, 60, 70, 80 bucks, relatively speaking, quickly, to wait for 422, because you've got a double top there in the middle of your chart at the top. You got a double top around 420, 422. Some people might say, well, that's really your long-term resistance. It's a fixed point in time, and we know there's going to be a lot of back and forth until then. Finding those dynamic back and forth potential support and resistance points is really where Ichimoku, I would suggest, is strong as a system. It takes the historical trend into account and offers you support and resistance based on that, as opposed to just looking at where the market was before, given that we may be in just a fundamentally different price zone, because in this case, Netflix had a not so good earnings release and moved lower, much lower. I would say maybe they need to raise subscription fees, but I wouldn't like that as a consumer. All right, so let's take a look at some questions, comments. Just check in here at the box if anybody has any questions on Ichimoku. I'm happy to take questions on Nadex or questions about the platform or anything. So give you just 10 seconds here to ask a question, and we'll see what comes in. All right, got one question here, and I'm glad this was asked because this is something I wanted to talk about. So one question is about using Ichimoku with different other indicators, right? So you may, let's say RSI, a relative strength index. And if you're not familiar with RSI, that's okay. We actually did a webinar on it and other technical indicators. You can go to the Nadex YouTube channel and watch that. Fantastic resources out there on the Nadex YouTube channel. So RSI is another momentum indicator, and it gives you overbought, oversold levels. Something really Ichimoku doesn't do. With RSI, if it, typically if an issue is above 70 or 80, it's overbought and ready for a reversal. If it's below 30 or 20, it's oversold and ready for a reversal higher. So I do use, and I recommend as you're comfortable, especially if there's other indicators you've been using and you're looking to fold Ichimoku in, absolutely with RSI. Ichimoku is good with momentum, but it does not give you a momentum indicator like RSI that gives you overbought and oversold. So what you can do is pair something like RSI with Ichimoku, where Ichimoku will give you support and resistance. RSI will give you indications as you get to overbought, oversold, potential turning points that may, maybe a breakout point. You may be in a downtrend on the cloud, you're in the cloud. One of the questions folks will typically ask is, hey, if I'm in the cloud, how do I know which way it's going to break? The cloud doesn't exactly always give you that indication. It could be flat, but if maybe it's been in a downtrend and RSI flashes oversold, again, certainly it's up to you as a trader, how you want to play that, or what level of conviction you have behind that. But that RSI complement could be, hey, this is oversold. We're certainly in a sideways consolidation move, but it's been in a downtrend. That may be exhausted. And then you could start looking at Ichimoku for your 26-period future support and resistance points based on the fact you think this might be about to turn based on what your RSI is telling you. So absolutely great question. Love pairing Ichimoku with other indicators, and it really can be used with just about anything. The only thing I'd say on that, on the flip side, is if you're using other moving average indicators with it, it's going to be redundant and it's just going to add more lines that are messy to your screen. Another reason why I like RSI, because it sits below your trade station. So if you use MACD, if you use RSI, if you use ATR, average true range, and some of those indicators, absolutely use those with Ichimoku. Again, I recommend you go to nadex.com/demo and practice, so you can kind of figure out as a trader how your comfort level and how you want to use those together. But I think that's absolutely a potent, potentially, depending on your comfort level, combination. And absolutely, I think one of the strengths of Ichimoku is it so easily plugs into other indicators. I would say you wouldn't need another moving average indicator. All right. Well, as I said, there's my email address, jason@thedutchbook.com. I'm serious. Email me anytime. Write that down. If you have a question a week from now, 2 weeks from now, if you rewatch this a month from now and have a question, you can email me at any time. It comes straight to me. Love to dialogue and refer you to some other resources, tell you what I think, or help you in any way I can. Certainly thank Nadex for putting out this fantastic opportunity for me to share with you. And I congratulate and compliment each of you. Your investment in yourself and your own education is the single best determinant to your own success, in my opinion. And the fact that you're here taking some time to sharpen your skills and learn tells me that you're on the right track. So give yourself a pat on the back. Thank you for listening and hanging out with me. and thanks to Nadex.com for hosting us. So email me anytime. And with that, I'll wish you luck the rest of the day, and check out the webinar schedule. We've got a couple other webinars incidentally coming up over the next